Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. So since yesterday you can see we do not have big changes on the market, so today just few common thoughts on the current situation. If you remember in the weekly report we talked about a large bearish engulfing pattern which stands on the weekly chart, and that was the reason, additionally to some fundamental moments that we discussed in the weekly report, that theoretically that should be the background for some moderate retracement on the gold, because market is a bit overextended to the upside based on all this nervousness situation around the virus spreading and so on. Initially, as you can see, the drop indeed has happened very accurately with the completion of this engulfing pattern, and our plan was to get some moderate retracement back up for considering taking the short position in the downward continuation. But extra meeting by the Fed intruded in the normal process of the price action and led to appearing of this rally to the upside. Theoretically, the pattern that we have on the weekly chart is still valid, because to erase this pattern, market has to climb above this previous top. And currently, everything depends on the intraday price action that we see with this, let's call it, as they call it yesterday's morning star engulfing pattern, because depends on this pattern, we will see whether the market indeed will continue to move higher or that was just emotional action and market will show downward action. Currently, guys, it seems that upward continuation is really probable because market stubbornly stands around this previous achieved top of this rally. So we do not see fast return right back down, starting of the raising of this action, which usually happens when the reaction mostly emotional and speculative. No, we do not see that. We see that rally has happened and market still stands flat since then. Besides, market currently is not at the overbought on the daily chart, and it really has the room to continue move higher. So from that standpoint, currently it would be better to not take the short position despite that our engulfing pattern on the weekly chart is still valid. We need to get the clear sign of some weakness on the market before it proceed with our pattern. Until that will happen, so really chances exist that we will get the continuation to the upside. On the 4-hour time frame chart, we already talked on this, that theoretically we could consider possible pullback somewhere to the 1620 area, where stands the disrespected confidence level. This market has broken without any reaction. And theoretically we talked about this small head and shoulders pattern that could be formed on the 4-hour time frame chart. Market currently is still calling around 1640 resistance. Here we also could keep an eye on the grubber, so some spike down will happen, forming some grubber pattern which suggests the taking out of the stop. That could be also the sign of the possible continuation to the upside. On the hourly chart, there is another scenario that we talked. So with this head and shoulders pattern, we said, take a look, guys, XOP has not been reached yet, 1661, and it could happen that market will hit the XOP first and then shows the moderate pullback. This also could happen. Currently you can see the market's forming the triangle, which gives chance on the immediate upward continuation, because when you're dealing with the triangle mostly after the rally, as a rule, this continuation pattern, as you know, and it really could happen that market will hit the XOP. So the support, the confidence support, stands around the same 1618, 1620 area, in agreement with these previous lows, which stands in harmony with the possible head and shoulders pattern. So as you can see, overall thoughts that we discussed yesterday are still the same. The scenario that we discussed yesterday also stands the same. And here we just would like to warn you that it's better to not trying to go short right now until market doesn't show the real weakness signs, and chances on the failure of the weekly pattern currently exist. So that's why, despite it stands valid and it has not been erased yet, well, overall price action here tells us that probably this was not just emotional action, and the market really could show the continuation in the near term.